Thank you so much, Lisa. What a pleasure to be here with everyone. Talking about taxes is one of my favorite things to do, which probably sounds insane, but now is the time when we do it, and my job is to make your tax life a little bit easier, both now and in the future. I've gone ahead and shared my screen. You should see a copy of the slide deck. You also have access to this in the resources to the webinar. So look for that on the South Arts website. And with that, let's just dive on in. As I mentioned, the goal is to make navigating tax season and your tax life more broadly a little bit easier. Not only now for this tax filing season, you're probably filing your 2024 taxes now, but also into the future. So, as part of achieving that goal, we're going to review the overall income tax landscape in the United States, answering sort of 5 key questions about taxes and things you need to know. We'll talk about ordinary and necessary business expenses that reduce your net business income and the tax you pay. And then we'll also talk about effective ways of keeping track of your income and expenses, those record keeping systems that might serve you well. As Lisa mentioned, my name is Elaine. I use she, her pronouns, and I am joining you today from Dublin, Ohio, which is Kashkashkia and Hopewell Indigenous and Cultural Lands. I am a Caucasian woman in my mid-40s with wavy, dark blonde or light brown hair, depending on the day, and I'm in a multicolored jacket with some orange and cream and navy speckles over a navy shirt today. Professionally, I am a certified public accountant, a CPA, and I also hold a PFS designation. That's that personal financial specialist designation. I'm also an accredited financial counselor. So we can cover tax stuff and personal financial planning things, and then the human side of money, which is how those pieces all come together in my work and in my world. I am by far the luckiest money person ever because all I do all day long is hang out with creative individuals and help them with the business and financial side of their creativity. I am so fortunate to work with incredible arts supporters across the country, just an unbelievable group of folks that support artists across all different disciplines. I also work with a number of different state arts councils and commissions, some local governing arts bodies, and then regional partners, including, of course, South Arts. So huge thanks to them and all of their supporters who make workshops like these happen and available. I'm also a big believer that you cannot hear this information often enough. So I get to hang out with college students and work with colleges, universities, conservatories, and their alumni. Very often, being in college is a little bit early to think about your future tax life for many folks, but it's amazing how ready the students are really to enter the professional side of their creative careers. As we go through all this information this evening, I invite you to take space to make sure your questions are answered. As Lisa mentioned, we have the Q&A feature set up within the webinar. That's going to be the best spot to put any questions you want us to address towards the end, and also in real time if I can keep an eye on it and if something is relevant as we're going through information. I'd also invite you to make space for others to share their questions as well. There might be questions that you already know the answer to. That is fantastic. We are all bringing different experiences and levels of knowledge to this conversation. So make sure you're making space for everyone to make sure their voices are heard. I will also say we are all equal parts teachers and learners in this space. You all have tremendous experience and knowledge and resources and stories to share. So I invite you to share those. If we get the chat undisabled, you're welcome to put tips and resources there. We can also share them as a community through various other platforms, because again, you have tremendous expertise you're bringing to this conversation. I will also remind you, you have full agency. So as we talk through some of these things, there's a lot of room for judgment, and there's a lot of room for you to take the information and apply it to your own creative practice in a way that works for you. You are the person who knows yourself best. So don't forget about your own agency as part of being, equal parts teachers and learners. And then lastly, although this is being recorded, we do ask that any stories that might be shared stay here within the space, but by all means, take any lessons from those stories and carry them with you. Although I am a CPA, I'm providing all of this information for educational purposes only. It is not intended to be used as tax, legal, or accounting advice, but you probably knew that. I will also note that we are in a time of a lot of uncertainty right now. A lot of things are changing and in flux, especially when it comes to the IRS and to taxes more broadly. It might be a bit slower to get a refund this year or a bit slower to get an answer from the IRS. They've had some recent layoffs, as you may have heard. And also, in 2017, there was legislation passed called the Tax Cuts and Jobs Act. As part of that legislation, or many parts of that legislation are slated to expire at the end of 2025. They may be extended in all or in part, but there is a lot of uncertainty now about what next year's taxes might look like. None of that uncertainty will happen or will affect your filing status right now or last year's tax season, but just know that there is some uncertainty kind of floating around out there. And lastly, if you have been paying attention to the BOI provisions, that's that beneficial ownership information reporting form, I will tell you that those provisions are now active. The final injunction was lifted at the end of February. There has been a lot of back and forth with respect to those provisions, but they are currently active, FYI. So let's start with kind of what we know about this year and specifically what is new for this year. Every year, there are some changes when it comes to tax world, right? The standard deduction amounts change, the tax rates and brackets change, those mileage amounts change, and also some of the retirement contributions amounts change. So for 2024, your IRA contribution limit is $7,000 or $8,000 if you are 50 or older. These numbers, by the way, are captured on the handout that were part of the resources shared with you in advance. And I will say, if you are someone who is planning for retirement contributions in 2025, there is something called a super catch-up limit in 2025. This relates to an individual's elective deferral limit. So the amount they can elect to defer from their income and save until retirement. If you are age 60, 61, 62, or 63 in calendar year 2025, you are eligible for what we are calling a super catch-up. That is part of the Secure 2.0 legislation that was passed a bit ago. And so you have an opportunity to save even more than you normally would be able to save for retirement. Now, again, that doesn't affect your 2024 tax filings, but while we're talking about taxes and while we're early enough in the year for you to maybe do some strategic planning and thinking about this, if that affects you, it might be a good year to take advantage of it. Also, as I mentioned, the standard deduction amounts and the tax rates are slated to change at the end of 2025, unless provisions of the Tax Cuts and Jobs Act are extended. Two other big changes I want to make sure to call to your attention. The first one has to do with BOI, that Beneficial Ownership Information Report. If you are a sole proprietor or if you run a nonprofit, you do not have to worry about this report. But if you are someone who has formed an LLC or is part of a partnership or an S corporation, you might be subject to the new BOI reporting requirement. BOI stands for Beneficial Ownership Information Form, and it's an anti-money laundering effort instituted by a group called the Financial Crimes Enforcement Network. Their website is FinCEN, FINCEN.gov. So as part of this, they required any of these pass-through companies to file information about who their beneficial owners were, essentially the humans behind some of these pass-through companies, again, with the intention of fighting money laundering. The form is very simple. It takes about 7 minutes to fill out. It is free to complete it on FinCEN's website, but it was originally supposed to be due on December 31st. There was a flurry of judicial activity in December, and the final injunction was lifted on February 18th, which means the requirement to file is no longer suspended while the judicial system does its magic. It is back in force. And as of the lifting of the injunction date on February 18th, folks had 30 days to file that form. So we're approaching the end of that 30-day period. So if you are subject to the filing requirement and you haven't yet, it's probably a good idea to go ahead and do that. Part of the reason BOI was getting so much attention, especially towards the end of the year, was that the daily fine for non-compliance was extraordinarily high. $500 a day was the fine if you should have filed this form and didn't. On Monday of this week, the Treasury Department announced they would not be imposing these fines for domestic, as in US based filers. So that's good. There may not be a financial penalty. Our understanding is you still have the requirement to file, but there might not be quite as onerous of a financial penalty if you don't do that. If you have any questions on this, please throw them in the Q&A and we'll make sure to address them. The final change I want to make sure to bring your attention to has to do with something called a 1099-K. A 1099-K is a version of the 1099, and I'm sure you receive many, many of these every year. And this one is issued specifically by third-party payment settlement companies. So think about Venmo or Cash App or PayPal, those types of companies. If you are someone who has a certain level of business transactions on those apps, you will have gotten a 1099-K. Now, up until 2023 and through 2023, the limit was $20,000 or so. In 2024, that limit was dropped to $5,000 in business transactions. And you can see for 2025 and 26, it continues to drop until it becomes on par with all the other 1099 reporting thresholds at $600. Now, why does this matter to you? If you are someone who receives payments from clients through one of those apps, and you have those payments mixed in with your personal transactions, so when a friend pays you for dinner or when your roommate sends you money to split the utilities or something like that, you might exceed these thresholds and these companies might think that is all business activity. It's unclear how they're going to really sort of parse out the business and personal difference. But my suggestion to you would be, if you do have everything kind of commingled together, be aware that the reporting threshold for these companies to issue 1099-Ks is decreasing. So this is a good year to really clean up some of your activity on those apps, which probably means setting up a business account. I know there are fees associated with that, but the fees are deductible and that is a cost of doing business. So I don't hate that as a sort of professionalism approach. In terms of other action items related to these new things, fincin.gov is that place where you can file that form for free if you need to, and make sure you are using all the correct numbers, both for 2024 and in looking forward. Great question in the Q&A. Does Zelle count as one of these third-party settlement apps? Generally, no. From everything I've seen and read, Zelle, because it is primarily used for person-to-person and bank-to-bank transfers, Zelle is excluded from the 1099-K reporting threshold. I will say, though, Shopify started sending them out last year, and some states have different thresholds for the 1099-K reporting as well. So sometimes folks were getting them even if they thought their activity level didn't exceed the thresholds. So a little bit of uncertainty among a lot of folks, but great question in the Q&A. Zelle should be excluded. Thanks. Keep those questions coming. Okay, that's what I got for like the new stuff. So now we're going to move into a little bit more of a high-level view of how taxes work in the United States, and then what you can do with that information. So if you are a permanent resident of the United States, a dual citizen, or a US citizen, you are filing Form 1040 every year. This is a version of what your form looks like. It's a much prettier and simplified version, but this is basically the key information that's contained on Form 1040. That's the main tax form, and then there are a lot of additional informational forms or calculation forms that go behind the main tax return. If you are a non-resident, maybe you're an international student or you're here on a different visa status, you might be filing Form 1040-NR instead. The IRS has a lot of guidance about any folks who fall into categories that are not permanent residents, dual citizens, or US citizens. As we look at this information, what I like to do is kind of tease out kind of 5 key tax questions, all of which are very relevant for folks in the arts. First, we want to know the type of income you have. Why? Because different income gets reported in different places and it's subject to different taxes. So it's important that you kind of know the type of income you have throughout the year. If you are running a business, and we'll talk about what that means, it's important that you are keeping records to support your business activity. And it's also important that you have a good sense of what is really deductible for your business. That's all for calculating this net business income amount. After we think about sort of those types of things, it's also relevant to talk about the other ways of reducing taxable income. Generally, they fall into these adjustment categories and also the standard or itemized deduction category. And then lastly, we like to understand how you plan for taxes. That means having a sense of what the tax is, how it's imposed on your taxable income, and the action steps you can take to really navigate this process going forward. So let's start with the types of income. In general, every dollar you earn gets reported somewhere on your tax form, whether it is interest on your bank account or investment income or a prize or award, or occasional hobby-related income or business income or wages. It all ends up somewhere. And in the arts, the most common types of income we have are related to wages. This is when you are an employee of someone else, or business income. So self-employment income, contractor income, freelance income, any income associated with your own personal business activity. It is also possible that you will have occasional other income. In general, though, most of the income we see comes in the form of wages and then business-related income. So what does that mean? From your perspective, it might feel like you're doing the same thing, especially if you're a theater professional and say some theaters pay you as an employee and then others pay you as a contractor. Or if you're a musician, your subbing gigs with a local orchestra, for example, might pay you as an employee, whereas other freelance gigs you might have might be self-employment income, right? So it gets a little squishy in the arts, right? Because other different groups treat what feels like the same income as different types of income for tax purposes, which is really frustrating for you. So what that means, or what you need to do essentially, is make sure you know if you are being paid as an employee or if you are being paid as a contractor. If you are paid as an employee, your employer is sharing your Social Security and Medicare tax burden with you. That's really nice of them. They're also withholding that tax automatically, plus any income taxes you might be subject to from each payment to you. But you are not allowed to deduct any expenses associated with earning your W-2 income. Right? No business deductions for W-2 income. On the other hand, you might have business income or self-employment income or freelance income. This is generally associated with an activity you are pursuing on a regular basis with the intention of making money from it, right? You are running a business, so to speak, in the eyes of the IRS. Of course, there are no withholdings on any of these payments to you, and you are responsible for paying all of your own taxes out of pocket. But you are eligible to claim ordinary and necessary business deductions to reduce your net business income or reduce the amount that you pay taxes on. So it's important to understand this distinction so that you can pay the right taxes and also associate expenses properly with the different types of income you have. Question in the Q&A from Stephanie: how do states treat hobby income? This is a fantastic question. I would say it probably depends on the state, but in general, hobby income is reported as other income on your federal tax return. That means you are not allowed to claim any deductions to reduce that income, but it is not subject to Social Security and Medicare taxes. It is subject to federal income taxes and likely state income taxes, unless the state has some sort of hobby exclusion, right? Which is possible. But in general, most states start with your adjusted gross income. And then, unless they have another adjustment, that's what you paid tax on at the state level. Great question. Keep those questions coming. So, because it's so important to understand if you're running a business, let's talk a little bit more about what that means in the eyes of the IRS. Because it might mean that you have formed an entity or reserved a name with your state if you're doing business under a different name, or you might have a separate EIN or a business identification number, but you don't have to do those things in order to be running a business for tax purposes. The most important thing is that you approach whatever it is you are doing professionally and keep books and records documenting your business activity. Most of the time, this means records about your income and expenses. So financial records generally is what the IRS is most interested in, right? But it also might mean records about your customers, or maybe a list of grants you've applied to, or a list of festivals you have applied to, or different shows you've pursued, right? There could be a lot of different books and records that help support this notion that you are approaching what you are doing professionally, right? And that's really the distinction between something that's a business and something that's a hobby, right? Because if it's a hobby, it's generally something you're doing personally, not with the intention of making money from it, right? If you're approaching it professionally, the goal is often to make money. Maybe that's not the only goal, but that is often a goal of approaching something professionally. So let's talk more about this idea of books and records, because the IRS says you can use any system suited to your needs as long as it shows your income and expenses. There's a lot of room in that definition, right? Any system suited to your needs. So I would encourage you to think about how you work best and then build or find a system that complements that. Sometimes we try to find a system that aligns with the most aspirational version of ourselves. And I love that as an impulse. But from a practical perspective, I'd love for you to have a system that really works for you without requiring a whole lot of work for you to get excited about using it. So that means if you are an analog person, we can lean into binders and envelopes of receipts and logs and all sorts of more analog type of systems. If you're more digitally inclined, there are plenty of automated software options that are sort of algorithmically based, that learn how to categorize your activity based on your habits, right? And then there's lots of room in between those extremes. But no matter what system you use, for each business transaction, you want to make sure you're keeping track of the date of the transaction, the counterparty, so who did you pay or who paid you, the amount of the transaction, and the business purpose, right? And this business purpose becomes really important because the date and the counterparty and the amount, all that information is captured on your receipt or a bank statement or a credit card statement. But the business purpose is something that you will proactively supply as part of your system to help explain why the expense is a business expense instead of a personal one. So for example, let's pretend Lisa and I are going to go out to dinner after this. And I'm going to say, Lisa, I'd love to take you to dinner. I'll buy. While we're there, would you share some feedback from the tax workshop today? And Lisa might say, yes, absolutely. So the date is March 6th. The counterparty is Lisa's favorite restaurant. The amount might be $100. And the business purpose is business dinner with Lisa from South Arts to talk about feedback from tax workshop. That's what makes it a business meal instead of a meal with friends. There's a clear business purpose associated with it. And it's important that you document that in whatever way you are keeping track of your income and expenses. One way of keeping track is through a database system. By database, I mean Excel or Google Sheet or numbers, right? Using this approach, you would basically export data from your bank account or your credit card, delete whatever data is irrelevant in there, and then organize the transactions, probably putting them into different categories, and then using some formulas to add them up by category. This takes a little bit more work on your part to do, but it gives you a whole lot of flexibility to sort of report and control kind of whatever you want as part of the overall system. This database approach is going to be excellent for someone who is pretty self-motivated and has relatively basic tracking needs, right? You don't need to send invoices or accept credit card payments through Excel or anything like that, right? And it's really good if you want to keep track of multiple things. The folks I know who use Excel or Google Sheets tend to like to track business things and personal things in sort of the same document, and like to maybe add additional reporting that isn't necessarily captured in a software system. Timelines often come up for folks who like to see a whole timeline in Excel along with income and expenses, maybe on a project by project basis, right? So if you want a lot of control and you don't mind getting comfortable with Excel, a database system can be a really great option for you. I will say as well, oftentimes your financial institution might have some reporting features already built into their apps and their website. So that could be another relatively easy option for tracking information that might be helpful for you. But if you want a database, this is how I might set it up. And there are hundreds and hundreds of templates you can find online. There's a link on the slides and in the resources to a template I have that you are welcome to use. You will need to make a copy of it and save it to your own Google Drive. That way you won't accidentally share all of your information with everyone else who has access to the template, right? But it's pretty simply set up, right? This is a visual of what it looks like, and I can show it to you as well. I have it open here. As you open it, it's got some instructions. There's a summary tab here that will summarize all the information by category. And this detail tab is where you're doing most of the work. This is where you're entering all the information, and then you're choosing the category that corresponds to whatever data you have entered. So let's say today, March 6th, 2025, I'm going to book a flight on United for $357.23. I'm going to put that in the airfare category, and I'm going to say flight to somewhere for workshop, right? It will automatically then summarize and add that amount to this summary sheet. See, here's that airfare, that flight I just entered. So that way, as you're going throughout the year, it'll keep a running total of everything. And then you can match these categories to the categories on your tax form, right? And that's what this is designed to do. It's designed to enable you to keep track of things relatively simply so that you can lean into tax season a little bit more comfortably throughout the year. So that's a pretty easy way of setting up your own system. Relatively easy, I should say. If you live somewhere where you are using your personal vehicle for business purposes, you also might want to keep a mileage log. There's a link to that in this same template. It's just on a separate tab. And the purpose of this is to just track your miles throughout the year, your business miles driven, so that you can multiply the total miles by the standard IRS rate. That deduction will then show up on your Schedule C under the car and auto line, and that's a way to keep track of your miles. If you are slightly more app inclined, Mile IQ is an excellent app that will keep track of your miles as long as you're comfortable enabling GPS tracking on your phone. Or if you're using some of the software systems we'll talk about in a moment, namely QuickBooks, there's a mile tracking feature within there as well. There's a great question in the chat about whether or not you need the actual receipts as part of this tracking. And the answer is yes. The IRS will want you to produce that original documentation in addition to having all this key information. Now, if you don't have a receipt, it's probably not the end of the world. But if the IRS asks to see it, they're going to want to see the receipt in substantially similar to its original form. which basically means you can save the original receipt. Maybe you write over the amount in case the ink fades over time. You can also scan receipts. If you get receipts via email, you can maybe tag them in your inbox throughout the year and then create one PDF at the end of the year with all of those sort of receipts saved. That way you have them if you need them. Great question. Keep those questions coming. Now, maybe you say, Elaine, I know you love Excel, but I hate it. I'm never going to use Excel or Google Sheets. And I will say that is okay. You are in very good company. There are so many different software options that could work for you that might make sense. And all of them have pros and cons associated with them. Remember, know yourself and then know how you like to work rather than focusing on one system that will, be the end all be all of systems, because I have yet to find it. They all have pros and cons. Simplify and Rocket Money and also Empower tend to be personal finance tracking systems. And so some people will kind of adapt them and add categories for different business expenses and income they might have. And that's really great. If you're a sole proprietor and everything is running through one account, keeping track of everything using Simplify, Rocket Money, or Empower is not a terrible option. It might take a little extra finagling to make sure the categories really align with what you need, but it can be a really great option. Empower is probably the most robust of these three. It is typically used by people who often have investment accounts or other sort of brokerage or retirement accounts that they want to monitor as well. Simplify and Rocket Money tend to be more focused on, checking and savings accounts and incorporating sort of that type of activity. So pros and cons to all of them. If you have a separate business bank account or business credit card, you may prefer a system that's designed to track business income and expenses. And that's what a lot of these other systems are. QuickBooks is usually considered the gold standard for small business accounting. I really like it. It's not all that intuitive to use, though. And so that left a lot of room for companies like Wave and FreshBooks to enter the marketplace because they are much more user-friendly. They're more intuitive to use. And Wave even has a free version that works for a lot of folks. QuickBooks does not have a free version that I know of, and QuickBooks and Xero tend to be on the more expensive side. Zen Business is also a really interesting option that increasingly people are liking. And then there are more specialized systems like a HoneyBook or My Music Staff. These both sort of incorporate a client portal into the tracking. They're especially good at contracts and invoicing, and in the case of My Music Staff, kind of scheduling student appointments in this case, although people can adapt it to different types of creative businesses. And then they also have income and expense tracking. So know thyself, know what you need to track, and know what kind of makes the most sense for you. This software system or any of the software systems is probably best for someone who does have that separation between their business activity and their personal activity. There are exceptions. That is not an absolute rule, but if you are commingling everything, you might just want the control that Excel or Google Sheets will give you. Also, with the exception of Wave and Rocket Money, these systems are not free. So this is probably for someone who does have a little bit of room to invest in some sort of system. And if you want the automation or the invoicing capabilities or some of the additional features, you're going to need a system to get some of those instead of using Excel or Google Sheets. But you may still need Excel or Google Sheets to do some of your budgeting. One of my favorite writers really loves Rocket Money. I find the alerts a little annoying, but she really likes that the app will remind her to categorize different expenses, right? It really works for her. But because she's a writer, her income tends to come in two really large royalty checks twice a year. And every time she gets a royalty check, Rocket Money wants her to update her budget because it'll tell her something like, hey, looks like you got a raise. Because again, these systems are designed for people with W-2 jobs and direct deposit. They are not designed for people with very irregular sources of income. So what do? We budget in Excel and then just ignore all those Rocket Money alerts because they don't apply to her. So know that you might need to adapt your system so that it works for you. Question in the chat. Do you have to use cents in your calculations, or can you round to the upper or lower dollar based on all of these calculations? Best practice is to also capture the cents and then round the amount at the very end of the year. So you can see in this example, the cents are captured, and then at the end of the year, we would add up all the car and auto expenses or all the business meals and coffee, and then we would round it. That's a little bit better than rounding each individual transaction. Great question. And if you are sort of automatically importing data into any of these, it'll always include the cents. No matter what system you're using, you definitely want to make sure you're saving your records for a 7-year period. The statute of limitations, the amount of time a taxing authority has to examine your tax return and ask questions, is typically 6 years, or it could be extended to 6 years, I should say. So we take that 6-year period plus the year in which the expense actually happens, and that's how we get the shorthand to say save everything for 7 years, because that 6-year statute of limitations only starts on the later of the day the tax return is filed or its due date, right? So we're looking basically at a 7-year period, which is a long period of time. Throughout the year, as you're tracking income and expenses, my suggestion or loving invitation is to keep track of the income and expenses on a regular basis. I do have some folks I work with who save it all until the end of the year and then spend a day or two kind of organizing it. And that works for them. But they're really kind of missing out on an opportunity to be a little bit more proactive about what's happening with their money throughout the year. I know it's probably not the most exciting task you may have, but if you could save maybe about 2 hours once a month or once a quarter, depending on the volume of activity in your business, you will thank yourself as you stay on top of this a little bit more. Or if monthly or quarterly doesn't work for you, you can do it and keep track of things based on whatever rhythm makes sense with your business. There's a jazz musician I work with that I absolutely adore. And she says, Elaine, I can't do monthly or quarterly. I will do all of my numbers at the end of every tour, because she's on the road for extended periods of time, but it never lines up with a perfect month or a perfect quarter, right? So for her, the right rhythm is keep track of everything on the road, go through it all when she's back with some downtime or admin time. And that's perfectly fine, right? So you know yourself best, and you can figure out a way to manage all of this as you're going. All right, so that was our books and records sidebar. And remember, we were talking about the criteria the IRS has for understanding if you are running a business or not. So approaching it professionally and keeping books and records is the important first thing. It's also important that you spend enough time on the business activity to make it profitable. This is where we think about, are you regularly conducting this activity? It doesn't have to be full-time or full year, but if you're a musician and you're doing one performance once a year, that doesn't really feel like it rises to the level of being a business. That feels like other income to me. But if, during very busy seasons, you're regularly booking gigs, yeah, that feels like you're regularly conducting that activity. The IRS also wants to know that you have the knowledge needed to make your business activity successful. And it's really good if you are making money from it. And it's even better if you're depending on it for your income or making a lot of money from it. But we know that's not always what happens, right? Depending on your segment of the creative industry, 2024 may have been a rough year for you financially, as it was for a whole lot of visual artists in particular. So the IRS has something called a rebuttable presumption. And the rebuttable presumption says that the IRS will assume you are a business if you are profitable, meaning your income is higher than your expenses in 3 out of every 5 years. So that means 1 year with a loss, no big deal. 2, 3, 4 years in a row of losses starts to look a little bit more challenging from a business perspective, right? Now, it is a rebuttable presumption, which means you can provide evidence that you are, in fact, running a business, even if it's not a profitable one. But in my dream scenario for you, you are making money, positive net income from your business on a regular basis. So, assuming you're running a business and you're keeping those books and records, right? The next sort of logical question is, what can I deduct if I am running a business? And this is basically what that looks like. We know that it's the net business income amount that gets added to all of your other income on your tax form. And we get to that net business income amount from an extra schedule called Schedule C, if you're a sole proprietor or the only member of a limited liability company. If you're an S corporation or part of a partnership or a multi-member LLC, you have Schedule E instead of Schedule C, but generally the same things are deductible. So on this detailed schedule, we show all of your business income, and then we report business deductions by category. That gives us your net business income amount. So as you're thinking about these deductions, the general rule is that a business expense is deductible if it is ordinary, necessary, and effectively connected to your trade or business. You remember in the example a few slides ago of the dinner Lisa and I were going to have after this workshop, there was a clear business purpose that effectively connected that dinner to my trade or business as a financial educator. Then we say, is it ordinary or common and accepted in my industry to have business meals? Absolutely. Is it necessary or helpful and appropriate for my trade or business to have this dinner? Absolutely, right? So we go through this criteria to basically say expenses that are ordinary, necessary, and effectively connected to your trade or business are generally deductible. And we say generally because there are always some special rules. And business meals is one of those special rules. Any business meals are subject to a 50% limitation, meaning only half of the cost is deductible. That's okay. I'm still going to track the entire cost of the meal, but when I report my taxes, I or the software is going to make that adjustment to only deduct half of the cost of the business meals. This is what Schedule C looks like, or I should say the expense section of Schedule C. There are a lot of categories that might make sense for you, depending on the type of creative work you pursue. Most folks have some level of travel or deductible meals, business meals, as part of their expenses. Supplies lives over here and comes up a lot. Office expenses also comes up. If you ever hire other artists as contractors, maybe you're the musician who gets paid and then you pay out your other chamber group or bandmates or subcontractor friends. Or maybe you're an artist that hires people to help with an install or hires folks to sort of help with some other project you're running. Contract labor is where you're going to report payments to those individuals, assuming they are your contractors. You also might have legal and professional services, so fees to pay an attorney to review a contract, perhaps, or help filing paperwork to sort of remain compliant with all the different requirements in your state. Or again, depending on your creativity, you might purchase equipment or instruments or other sort of larger assets that you can either depreciate, meaning spread the cost over time and deduct, or deduct all in 1 year if you make what's called a Section 179 election. So let's pretend you are a violinist and you run a quartet group. And so every time you are paid, you receive the money and then you pay out the other members. That's going to be your contract labor. And let's pretend you have to rent a car to help the cellist get the instrument to a gig. You might have a vehicle rental cost associated with various gigs. Let's pretend you all have a dinner before a performance to do some final prep. That would be a business meal. And let's pretend you also buy a special violin that is played by different members of the quartet. You may choose to deduct the entire cost of that instrument in the year you bought it instead of spreading it over time, right? So a lot of these categories do make sense for creative businesses. And there's part 5, which is on the back of Schedule C, and it is basically a whole blank section. And that's really nice because it is very possible that you will have some expenses that don't really fit well into some of these other categories. And in that case, you get to define your own category in part 5. This is where keeping your own records is really important because you can kind of remind yourself that professional development perhaps may have been a category that didn't really fit somewhere else. So maybe you defined your own category in part 5. Just do that and be consistent from year to year to be very, very helpful. Question came through. If you are contracting artists out as the lead artist receiving a grant, do you also request W-9s from the contracted artists? Yes, absolutely. That is definitely a best practice. In fact, anytime you are paying someone, it's a good practice to go ahead and get a W-9 from them. The W-9 will give you their legal name, their mailing address, and their tax identification number. You will need those 3 things if you need to issue them a 1099 at the end of the year. Because remember, if you are contracting someone out, right, and you pay them more than $600 during the calendar year, it is your job to send them a 1099. And you'll need their email address to do that. And you will also need the amount that you paid them throughout the year. I say email address, you wouldn't email a 1099 to them because it has their tax ID number on it. But my favorite way of sending 1099s is through a website called track1099.com. I'm pretty sure it's like $3.15 to send a 1099. And it is digitally delivered, encrypted to the recipient. It's e-filed with the IRS, and then you keep a copy for your own records. Those tax forms are due by January 31st each year, so that the person who's receiving it has plenty of time to include the amount in their tax filing before it's due. So that's another good reason to kind of keep your expenses organized so that you can make sure to send out those 1099s on time. If you are using QuickBooks or Wave or any of the other softwares, and if you are paying for sort of a payroll or a contractor option within those softwares, which is not the entry level, usually that's kind of the next elevated level, you probably have that automated reporting baked in that software. But if you don't, TrackNet1099.com is a great option. Here are some common deductions for visual artists. This is not intended to be sort of a comprehensive list, but these are very common expenses that visual artists have that come up with some regularity. Supplies, materials, postage, shipping, that tends to be a larger amount for visual artists. If you're a visual digital artist, you might have equipment and subscriptions and software you need to pay for. You might have submission and application fees. Travel is generally deductible as long as the primary purpose of the trip is business related. We talked about meals. A lot of the rest of this tends to be pretty sort of, I don't want to say obvious, but tends to be common expenses that come up, right? As a visual artist, depending on the type of work you do, you might have event insurance. So if you're a festival artist or you're hosting your own events, you might get a short-term event insurance policy that you would pay for. That could be a great option. If you're a visual artist with a whole lot of inventory, you might have a special policy protecting all the contents of your studio, for example. Or you might have errors and omission insurance if you're a graphic artist, for example, and you want to protect yourself against any sort of claims that you are fraudulent or infringing on someone's copyright or something like that. So lots of different types of insurances that might come up. We talked about equipment. Research comes up a lot. The business portion of your cell phone might make sense. Storage of all that artwork, or a digital storage space. Maybe you're a filmmaker and you need to subscribe to digital storage space. Absolutely, that feels ordinary and necessary. For performing artists, there are many of the same types of things that are deductible. Sometimes you have more sort of visual representation of your performances. So videographers or recordings you might have, headshots you might have, those types of things come up. Performance items is on here, but be careful. When we think of this as sort of like assets related to your performance. And if it is a garment that is not really a costume, but is something you could wear somewhere else, it is not generally deductible. So let's pretend you're an actor and you're going to do a reading and you'd really like to have a blazer. So you run to a thrift store, you buy a $15 blazer. You know, it might feel like that should be deductible as supplies for you being an actor, but in reality, it is not deductible because you could wear the blazer anywhere else. You might have different types of equipment, maybe recording equipment or special lighting. A dancer I work with has a bar and Marley floor installed in her apartment, right? So there might be types of things like that that make sense for you. If you're a musician, obviously instrument purchasing and maintenance of the instrument could definitely come up. Client gifts, opening night gifts, those types of things also come up often for performing artists. And lastly, literary artists. Literary artists typically don't have expenses that are as high as, say, visual artists, because you're not necessarily purchasing, you know, clay or supplies or shipping things to clients. But there are still a lot of expenses that come up during the course of your business. Memberships, individuals you might hire, software, subscriptions, networking costs, books and research, et cetera, et cetera, et cetera. Again, this is not meant to be an exhaustive list of different things, but rather just to start sort of priming your brain to think about all the different types of expenses that are generally deductible. Question in the Q&A, this person shared, if I missed the 1099 January 31st deadline, should I still send a 1099? I would say probably, just so you can make sure to be compliant. I would say maybe shoot a quick email or give a quick heads up to the person, just so they know that they can expect it. But I probably would, and then I would do my best to comply next year. Great question. As you're going through all of this, my suggestion would be, in addition to sort of going through all of your expenses, if you need to do that, but as we sort of think forward, just pay attention to kind of what you need to do whatever it is you do for those you serve. And then as you notice those things, supplies or equipment or, you know, updates for your website or whatever it is, just keep track of them, whether it is on a separate business credit card or in a separate business account, or just kind of tracking them or tagging them some way in some system you're using. Keep track of them. Because if you have the data, then at the end of the year, we can always figure out if there are special rules or if there's some sort of unusual circumstance that applies. But go ahead and just keep track of everything. I would also say pay close attention to any personal expenses that are disguised as business ones. So the general rule is that personal expenses are not deductible. We'll see in a few minutes about those adjustments and some itemized deductions that kind of do capture some personal expenses that are deductible. But the general rule is that personal expenses are not deductible. So that means if you do have something like a cell phone, you want to make sure you're partitioning out the business portion of it, which is generally deductible, from the personal portion, which is generally not. And as you're keeping track of all of this in whatever system you're using, I think it's really helpful to kind of guide your future self. So if, for example, you know that the line 24A is where travel costs go, right? But in your system, you have airfare and train tickets and lodging and Airbnb costs, right? You might have those all as different categories, which is totally fine. But if you can create sort of a map for yourself that says, okay, lodging and airfare and train tickets all go on the travel line, that will make it a little bit easier to translate your system into the tax form. And if you are doing taxes yourself using software, that will make your future life much, much easier. The instructions to Schedule C are pretty helpful, all things considered. And there's also a great publication called Tax Guide for Small Businesses. It's publication 334. So that's really a fantastic resource as you're building your knowledge. I will also say this publication has been translated into 7 or 8 different languages. So it really is an accessible resource to make sure you're getting sort of your full understanding. I don't see any additional questions in the Q&A. Are there additional costs or additional questions you would like to say? I see a couple coming through. Good, keep them coming. Does mileage go on the travel line? Great question. No, mileage actually lives on this car and truck expenses line, line 9. You can see there's a separate section down below for this, and that's where you report your business miles for the year. And if you're using software like a Free Tax USA or TurboTax or TaxAct as part of this line, they will also ask you about parking expenses or tolls or other costs like that that aren't necessarily included in mileage. So all of that will end up on line 9. Another question, is it a potential flag for the IRS if I have a large cost of contract labor, 10,000 plus, but did not file 1099s? And this person says, I pay a lot of people less than $600 a year. That's a good question. I would say it's maybe a potential red flag or a potential thing that might gain some investigation. But if there's a logical explanation, or let's say, on your website, you describe all the different projects you do, and, it's very clear that there are, hundreds of people involved in this, right? If it gets to the point where an IRS agent is looking at your tax return, they're going to poke around and see if that makes sense. And if it feels like, oh yeah, clearly this person is paying, a lot of people, less than $600, that's probably where it ends. But if there's a really, really large amount and it's not obvious that you're not in compliance with the 1099s, you might get a letter. But then that's okay. Open your mail from the IRS. They use snail mail. They do not call you, and they certainly won't text you, and they're not going to just show up at your door. But they will send you a letter to the mailing address you have on file with them. And it'll say something like, hey, looks like you paid a lot of contractors and didn't issue any 1099s. What's going on there? And then you could, maybe in my dream scenario, have a log of the names of the individuals and each payment you made to them during the year, and it totals up the exact number that is on this contract labor line. You could provide that to the IRS and say, look, I paid 75 people less than 600 or whatever it was, right? So they might ask, and then you can provide documentation. But I wouldn't say it's a red flag. It just sort of is what it is. Sorry, Lisa, go ahead.
No, it's okay. This is actually great. I just wanted to jump in to be respectful of everybody's time. If you have to leave, we thank you for coming with us. Again, the recording will be on our website. You also should have received the handout as well as the slides in an email. So look out for that. If not, please email me and I can send it to you. Elaine, if you'd like to take more questions, you're welcome to do so.
Yes, thank you. I would love to. Yes, as long as everyone is here, let's keep going. And yes, if you do need to leave, we fully understand. There's another question that I love. What are some green flags and red flags to look for when hiring a CPA? Green flags, really responsive. You're very comfortable with them. It's helpful if you can chat very candidly with someone and ask very candid questions. Another green flag is they respect what you do. Sometimes we'll hear stories of CPAs or tax preparers being kind of dismissive, like, oh, like, no, you're not a business, or nah, nah, don't worry. Like, the idea of sort of dismissing what you're doing doesn't always sit well with me. So definitely green flag to, make sure they're respectful of what you do. Um, Make sure they're responsive as you are reaching out to them. They are generally very busy, but if you're going weeks and weeks without hearing from someone, they're probably too busy to give you attention. And lastly, another great green flag is, are they familiar with the arts? They don't have to be an expert in all things artistic and creative, but part of the professional standards is that they do have an understanding of your business enough to sort of understand what is ordinary and necessary. So best case scenario, they work with other creative individuals as well. That would be my dream scenario for you. Are there additional deductions anyone is curious about? If not, I'm going to keep on going. The other ways of reducing taxable income, you've got this standard deduction amount, right? So that applies to anyone who's filing a tax return. You can claim that, or the itemized deductions, right? So that's an either or choice. And that is a choice in addition to business deductions you are reporting on Schedule C, right? So occasionally someone will say, oh, Elaine, I don't report business deductions because I don't itemize. And that makes me really sad, right? Because those are in two different parts of your tax form. So make sure you're capturing that. There are also adjustments to income that can be very helpful. These are some of the most common ones. They're all captured on Schedule 1, Part 2. You can deduct half of your self-employment tax. You can deduct retirement contributions unless it's a Roth. You can deduct premiums for your self-employed health insurance if you had no other access to insurance. And you can also deduct contributions to a health savings account. You need to have a high deductible insurance plan to contribute to an HSA, but that could be a really great option for you. Also, if you're paying interest on student loans, that's also deductible as an adjustment on Schedule 1. Great question in the Q&A. This person asks, are cost of goods sold deductible from hobby income? No. For hobby income, you are not allowed any deductions, which seems insane, and I totally get it. And this is different than the pre-2017 world, right? So you may have heard different things at different points in your career. Totally normal. Taxes change. If you are a hobbyist, you are not allowed to deduct expenses against that income, right? So pay attention to that. You also don't pay self-employment tax on it. So, file that away. Here are some resources for some of those adjustments I mentioned. And in case you see it, if you have a pass-through business entity, sole proprietor, LLC, S corporation, partnership, you also may see the qualified business income deduction. It's right on the front of your 1040. And just very roughly, it's calculated as 20% of your net business income. That's a nice extra kind of bonus deduction that shows up for folks. I normally don't mention it because it's usually automatically calculated, but sometimes people ask me if it's like a scam. It is not a scam. It is an actual deduction that you are allowed to claim. You calculate your tax in a couple of different ways, in a couple of different places, right? So you've got self-employment tax, income tax, and then state and local tax. And this is where sometimes people get thrown off, because if you Google how much tax do I owe, you will almost always see a federal income tax bracket. But if you are running a business, it's a little more complicated than that. So of this net business income amount, this is the amount you pay Social Security and Medicare tax on. We call it self-employment income. It is 15.3% of your net business income amount. And if you had the same income from a W-2 job, you would pay this as well, but you would pay half of it and your employer would pay the other half. They would take it out of your paycheck. It stings a little bit more when you are paying the employee and the employer portion of it, and when you're paying it yourself, right? So don't forget about this tax. This is the one that sneaks up on people. After we get to your taxable income, so after the adjustments and that standard deduction, then we calculate your tax based on these progressive tax rates. So every single person pays 10% on the first $11,600 of taxable income, then 12% on the next 35-ish thousand dollars of taxable income, then 22% on the next 50-ish thousand dollars of taxable income. So as your taxable income goes up, this tax rate goes up, but it doesn't go up on the whole amount. It only goes up on that next level, right? That next little piece. I will say, pay attention to the jump from 12 to 22%. That surprises people. And if you're earning income from 3 or 4 different sources, all of whom are paying you $15,000, $20,000 or so, the withholdings, if you have them, is probably going to be too low, because all of the taxable income added together will probably push you into this next tax bracket. And so that's the other way that sometimes folks get tripped up when they are estimating their own taxes. We calculate your actual tax and compare that to what you paid in during the year, either through withholdings or from estimated tax payments. And that's how we figure out if you get a refund, if you paid too much, or if you need to pay an additional amount when you file your tax form. If you have to pay $1,000 or more, you will likely have to pay a penalty for underpayment. That's usually a good time to start making estimated tax payments. Your federal return is also usually the starting point for the state tax return and your city tax return as well. If you live in a state with an income tax, or if you live in a city or municipality or parish with an income tax, you want to make sure you're aware of that and staying compliant. You are generally looking at your residency status to determine where you need to pay taxes. And I will note that depending on where you may travel to work, if you are a non-resident of other states, but you are there earning income, you might have a tax filing and payment obligation there. Every state and territory sets their own thresholds and rules. So if you are traveling somewhere and working there, make sure you're at least investigating what those thresholds are for non-residents to see if you may need to file. Also, there are states like North Carolina where if a company is paying an out-of-state contractor, they will automatically withhold taxes from those contractor payments, right? It's essentially imposing a non-residence withholding requirement. So again, every state has their own nuances, which is frustrating. And if you find yourself needing to research a lot of different states, that might be the time to pull in help from a tax pro. The starting point for many state tax returns is your federal adjusted gross income. That's the gross income amount plus those adjustments. It doesn't have to be the starting point for all states, but for many states, federal adjusted gross income is the starting point. Often for cities, it is just gross income without any of those adjustments. Each city and state can allow their own adjustments, right? 529 plan contributions are a common state adjustment. So if you have a kiddo or a niece or nephew and you are contributing to their college fund or 529 plan, that often counts as a state tax deduction or adjustment for you. And as you digest and internalize all of this, my offer to you or suggestion would be to set aside 30% of what you earn as a business owner or freelancer or self-employed person to cover those taxes, your self-employment taxes and the additional income tax. You can also adjust your W-4s if you want your W-2 jobs or your wages to have additional withholdings on them. The IRS has a great tax withholding estimator. It takes a long time to work through, but it is really, really accurate. Over time, also, you might be better able to estimate your own tax percentage. 30% is usually what we start with. and you might know your own situation or have seen enough tax returns that you know your percentage might be closer to 24 or 25%, or even 32 or 33%, depending on your scenario. This is also something a tax preparer or a CPA can be really helpful with. I put together this estimator. You'll have a link in the resources. You are welcome to play around with it. It is just a Google Sheet, so you'll have to save your own copy, but then you can drop in your numbers and get a very rough estimate of taxes. It is not as accurate as the IRS's calculator, but it's considerably more simplified. So if you're looking for a rough range based on your entity type and your filing status, that'll be a good thing to pursue. So with that, I will pause. I don't see any additional questions in the Q&A. Are there, oh, sorry, I see one that came in. Going back to 1099Ks, if you're using a business account with Venmo or PayPal and not receiving a 1099K, is it necessary to report every transaction on those platforms? Yes, your obligation as a taxpayer is to report all income from whatever sources derived, which includes income even if there's not a 1099 issued as part of it. So yes, go ahead and report all of that income and then all the business expenses associated with it. Great question. What else? Lisa, are there other questions that have come up or that folks are maybe chewing on? Oh, here's one. Thank you. Apologies if you just dropped this in. This person says, what do you do if you don't receive a 1099 from a client? You report the income, right? Because hopefully you are tracking everything in your system and you know you have income to report. That's my dream scenario. You might want to just keep an eye on things. There's a chance the form may have been stolen, or sometimes nefarious beings like to go through the mail to try to steal tax ID numbers or tax identification numbers. So maybe watch to make sure nothing weird is going on with your tax return or any of your bank accounts or anything like that. It is possible that the clients maybe didn't realize they needed to send you a 1099. So it's possible they didn't issue one. It is also possible they thought if you're an S corporation, for example, if they are paying corporations, they don't always have to send 1099s. So I would say you're going to report the income no matter what. And if you think it might be lost, maybe just check with the client to make sure they have your current mailing address. Maybe they need an updated W-9 to have that current mailing address, and just keep an eye on things in case somebody may have stolen your tax identification, but hopefully they didn't.
All right, Elaine, and we have time for one last question. This is from Judy. She said, you popped my bubble when you eliminated deducting clothes as an actress. What about grooming services, i.e. hair, nails, pedicure for a job?
I'm so sorry, Judy. I know it's really depressing, isn't it? Generally, everything you mentioned, those personal care services, right, typically aren't deductible. We typically think of them as sort of just general existing as a human in an industry where appearance matters. Where I think there's maybe an exception is if there is something that is clearly costumey or clearly associated with a character you might be playing. I think then you might have a little bit more room. And your argument, of course, would be it is not personal care. It's not appropriate for everyday wear or use. It is, very specific to this particular character. I would also say that's an opportunity maybe to see if the production might consider reimbursing you for those costs, because then it becomes a deduction of the production instead of you, the individual, and productions don't have the same limitations that individuals do. So that could be a potential workaround. Now, wouldn't it be lovely if all productions had plenty of money to spend reimbursing folks? But it might be a conversation worth having. All right, if there's nothing else, Lisa, I will just turn it back over to you and end with gratitude to South Arts for all they do to support creative individuals in the region, to NEA for funding to support these types of conversations, and especially Lisa and Kathy for everything you did to make this evening's workshop such a success. Thank you.
Yeah, thank you, Elaine, and Kathy as well. Kathy's been behind the scenes working for us all. Thank you to everyone who attended. Again, thank you to the NEA for your support. You can look for the resources and the webinar on our website. And until next time, you all have a good evening. Thanks.